Hey everyone, what's up? This is Mozart speaking. So, the current situation with crypto looks like this. This is Bitcoin. Alta, look worse. As far as I understand, it's about how much the media is reporting. But the main reason is that there's currently pretty low liquidity in the market. So, there's this incredible alternative to OpenAI, like DeepSeek from the Chinese, which only needed a few million or several tens of millions of dollars against billions of dollars for NVIDIA, but it has already managed to catch up in performance with all the major American companies involved in artificial intelligence. Against this backdrop, there was a strong sell-off in big techs like NVIDIA, and really in the entire AI sector, and that dragged down the whole NASDAQ index. And it, in turn, dragged down crypto as well. Well, just like a risky asset. Like an asset from the tech sector. This is the basic version, although the main point is that there was a bit of liquidity here. And let's take a look at where today's candle will close, at least. Well, maybe they'll buy it all back, and it'll close higher. Mark's at $100,000 above this block. Plus, there's support from the 30 and 50 moving averages. It's quite possible that could happen too. You can set up some links here. Some kind of trio. Up, the center, and the bottom of this block. That's why, in this case, you should set the stop somewhere if the average entry is around $94,000. Well, I think it should be set at 85. Stop is a trigger stop. You know how I set them up, how I love to set them up. So, it's based on the closing of the candle's body, not just on the touch. If the daily candle closes below the 85 mark, then that's it. We're getting out losing. You can set up longs here. But how does it all look? Well, Bitcoin looks more or less okay, but altcoins look questionable. Here we had an expanding triangle, which, by the way, is still expanding. And we've reached the apex of this triangle, meaning its center on the weekly chart. The same thing. There's a separate downward channel. We hit the center of this downward channel, and ideally, we should push it a bit. Maybe it will dip and then turn back up. Will it be like this? I don't know about the touch of the lower block. But it's quite possible. I'm not ruling anything out. On the 4-hour chart, this is also Bitcoin. We had a triangle here. Basically, you could consider this a diamond too. But the diamond, I'll be honest with you, is quite a tricky pattern, which works within an upward structure about 50-50, meaning it reverses the trend. Half the time, and the other half, it continues the trends to the height of its flagpole. The diamond also has its own flagpole. This is how it works in practice, unlike what's written in textbooks. If this is a false breakout and we close above the $100,000 mark, though, of course, I don't like this last 4-hour candle. So, with this kind of volume, it even shot past the weekly S3P, and it closed below it. Although it hit the 200, moving again. But the combination is questionable. So it looks like this if it's a false breakout. We're stopping here. Maybe we go down a bit more, then turn around and head up like this. Here we move around and then head up. This is what a false breakout looks like. We can't go too much lower. Lower are we talking about? So, I mean, just below this zone. Here are strong level mirrors. Here is the first block of limit orders from the lower block that I showed from the daily chart. Entry point long position. But overall, in any case, this block, these horizontal volumes, this is the ledge. This is the main, basic support line. Because if we drop below it, and we settle below the $91,000 mark, yeah, we're going down again, and we can cancel out this whole pattern, and then go down to the height of this part of the pattern. So, it won't be very pleasant. And it could even drop below $70,000, which is not typical for bull markets. I'll repeat myself, as I mentioned here and here. Then we took a nice, long position together. And right now, I'm saying pretty much the same thing. For bull markets, dropping below the 100 moving average, even if it just touches it, is pretty unusual. With just one touch right to the 200. Well, that's really not typical for a bull market in Bitcoin crypto. So, for that to happen, there has to be some kind of really bad black swan. Dips, this is probably bad for Nvidia, for American tech, but it's not a black swan. It's not critical. It's not a default, not with the national debt. So for now, it doesn't even smell close to that. Plus, the market is starting to price in some unclear rhetoric ahead of the Fed meeting on Wednesday. That also has a big impact. And if suddenly on Wednesday nothing terrible happens, and even Powell says, hey, there's some weird stuff going on with the economy, and maybe we'll even lower rates a couple of times, or even 3 times, then all of this could turn around really quickly, shooting up like a rocket. As for dips, I can't say anything for now. Here's another channel. We can draw it in white. Now it's visible too. And here we are testing the middle boundary of this channel. We're testing it, so it's quite possible that the day could still close above. We just pierced through, took out the liquidity, and then went up. Worse, honestly, total 3 looks bad. Why? Well, first of all, we've dropped below $1 trillion. It's bad, but for now, it's not critical. All of this that's happening right now is just a sideways market. A big long sideways market with an incredible chop of all the moving averages. We're taking out liquidity from the top, taking out liquidity from the bottom, then back to the top, and again from the bottom. So this market is just freezing everyone out right now. You can also turn around quickly from here. The main thing is not to make a new low. We're talking about $900 billion. So basically, following the same pattern, a triangle, we break it down, move around, do it like this, go down like that, and hit 1.3. According to the previous scenario. For now, this option still remains my base case, despite the strength of the current drop. Memes are suffering hard in this drop, but I told you about the dangers by 2024. If you're holding memes, I recommend focusing only on the top memes. So, what are top memes? In general, if you're holding on to memes, I recommend focusing only on the top memes. So, what are top memes? For example, Peppa, Doge, Floki, something like that. Bond, maybe. Everything else is very much up in the air. The same goes for Popcat. They've rolled back under 80% from their highs. Recovery is doubtful. And it's really questionable whether they'll bounce back to those levels. So that's roughly the picture. Next, total 3 on the daily. We're going back under the 50 moving average again, but still there is an upward channel, no new lows. From January 13th. This low, the mark is $900 billion. And it seems like we can still move within this channel. Seems. What's bothering me a bit here? Honestly, I'm not going to say with hopes that, yeah, no, guys, don't worry, everything is definitely going to go up. I'm saying it like it is. This is how I trade, and that's how I talk accordingly. This figure here, it should ideally play out. In bull markets, double bottom. We're merging today. It's still acceptable. So we can trade, close all these gaps, move around here, and still go up. That's possible. But if we drop below this low and close there, it will be a close below the 100 moving average. Below this low, a complete cancel of the figure. And what will that be? That will be a downward move like the height of this figure. Be a false one. This figure here. That's what scares me. And this is a return to $750 billion. And this is the liquidity being taken out from the highs of March 2024. I doubt this option, but I won't completely rule it out either. So I told you the conditions that are necessary for this. How will it play out? The chances of that happening are lower. Bull markets move, March-April diff. The chart moves in bull markets. Plus, if we did see this scenario in March-April, then the chart preparation was different here. So, look, this is on all coins, the same total 3. 1, 2. Second peak higher than first. Given that we have a crazy divergence showing up across all indicators. According to MACD, a double. And on the RSI, it's even, a triple. This, by the way, is about the preparation before such a reversal. Right now, there hasn't been anything like that on total 3. Nothing like that. Each peak we had matched the new, higher peak on the indicator. One peak on MACD. That's it. We haven't surpassed it again, neither in price nor in the indicator. And on the RSI, well, it's just this little thing. 1, 2. This little thing. It turned around, it's enough. It's enough really. But for this little thing that happened here, it's enough. That's enough, really. So, there's not as strong of a setup as there was in March. So, overall, the likelihood of repeating that March scenario is pretty high. Well, it was similar. So we drew this, there was a squeeze here. We broke through the squeeze, that was on May 20th. Squeeze, let's go. And we updated the last low of this squeeze. Right here. That's it, we closed. And we went up in height, accordingly. All of this squeeze from the exit point, just. But that was the execution. And the August. Gray Swan with the carry trade on the Japanese yen. There is no such scenario. Right now, I'm expecting it with a lower probability. So based on the chart from what we have, this is how I'm telling you now. But I'll still give you the scenario just in case. You have to understand that this is the market and I can't be 100% sure that it will go one way or another. I'm talking about odds. And I think the probability is like this. I think there's a high risk. Well, it's not this high right now. It will be, again, under the same scenario. It's better to take a week for this. Take a week. If the candle closes below last week's low, around. Weekly candle closing below previous low signals a significant move. This barking, that is, exactly, somewhere around $890,900 billion. It's not the daily candle that might show a false breakout, but the weekly one. If we break through this structure and close down here. This is where I would close all my midterm portfolios and altcoins that were accumulated last year. Under these conditions, that would probably be the sensible and only correct scenario. Considering the risks that we might test 750 and almost completely cover this entire candle. This whole rise here, and where I would start building new positions below 750, $800 billion and lower. Right in this zone. This is the setup for the midterm longs. But only for those that we started accumulating back in March 2024. But in any case, they will be closed in profit, even in total portfolio. Even if we close the week below 900 billion, this is the layout. But again, for now, I don't really know about any big, terrible consequences. So, what's happening right now? There aren't any terrible consequences. The market did react. Yes, there was low liquidity, and we did see some liquidations. Just to update that, liquidations on the blockchain, plain, without considering leverage, just pure cash, averaging around $70 million. The liquidation on January 20th was about 71 million, and all the liquidations look pretty similar. At the same time, the volumes are very similar too. It's more about profit-taking than just liquidations. Liquidation on January 20th was about 71, all very similar. Liquidations. At the same time, the volumes are very similar. It looks more like profit-taking than just liquidations. I'm definitely keeping an eye on Binance because it's the most liquid instrument specifically for Bitcoin in terms of volume. This really looks like profit-taking. This looks more like a cascade of liquidations with a continuation of the movement, like a year. It's more about this area, and this cascade indicates further decline. Also, right here, there's a reversal, and it looks like profit-taking. So, that's how it looks. Also, right here, for example, there's a reversal, and here, considering these volumes that are decreasing, it looks like profit-taking. Just to be safe. So this is how it looks roughly speaking, although there are a lot of liquidations on the blockchain. But all the exchanges are watching that. I'm only looking at Binance. So, and if things turn out to not be so terrible and not so bad, it's like the market has come up with its own ideas, either with the Chinese dip, similar to American AI, or during the Fed meeting on Wednesday. Then buying this back won't be a problem. But I've given you the main options. In the future, I'll definitely keep this current chart updated to review in much the same format. I wanted to take a look at the blockchain with you today, but there's already a lot to cover. I talked a lot. Let's save that for later. I don't want to make the video too long. We'll get to that later. Right now, that's enough. This is the information to avoid overwhelming you. What are your conclusions? The ones I gave. So, basically, that's what I actually think and how I plan to approach trading. Thank you all. This is Walnotes. I wish us all a successful week, although it's going to be quite challenging. There are a lot of events happening this week, and it's quite likely that it will be decisive. Why? Because historically, in February, crypto has performed really, really well. Regarding seasonality, starting from 2010, there has only been one February that was a losing month. In these almost 14 years, you help.